Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 23rd, 2021. It is 11:32 Eastern Time as I'm starting the video, and what I'm going to cover are just do a brief update on some of the recent agricultural commodities that I highlighted, particularly the grains. So we'll look at wheat, corn, and soybeans. And then on a related note, there's two other sectors I want to cover. The ag input stocks, those are fertilizer stocks, companies related to agricultural inputs, and also the cannabis stocks I mentioned the other day. There's a few of those starting to set up, and they're on my radar right now. So I'm going to start out here with wheat. This was shared. We've been long short wheat dozens of times, in the last couple of years. Just really swing trading right now. A lot of the agriculture commodities have been mostly in consolidation mode after big runs over the last couple of years. So I think they're a little bit more conducive to hit and run swing trading right now. Okay, so most recently wheat was mentioned. We had positive divergence with wheat at support 678.74 right there. That was a support. Positive divergence. And what I'm going to do is that's the trend line I had before, but I can see now we went in and back tested it, but we came a little lower. So I'm going to use that trend line off the highs right now. I think this is probably the more significant trend line, because we have, after we broke above it here, the old one, which is very similar, we came in and we back tested, and that gives a more accurate back test right there. So that's it. Wheat breakout back test. Here, let me just modify the trend line I have on this chart, so it'll be there next time we update this. And that's it. Breakout back test, still above the 678, 75-ish support where a case was made to go long. And I'm going to give you one other level because we're right here. We have a couple reactions around this point. So there it is. If we can pop that, we should continue on up here. I'm going to give you additional targets. Again, these are futures. As I often talk about, the ETN, if you don't trade futures, WEAT, that's the ETN, and I've laid out that. I didn't want to get too much in detail. I just wanted to give you an update and provide these additional, call it resistance level 717. Now I added additional target there, 733, and then 745.50 or so. Okay, here's what wheat looks like on the 60-minute chart. You have some resistance, which I can't recall if I showed this chart on the most recent trade, but that would have been a target as well, $7. So if we can pop that, we should be able to work our way up here to close to that 724-ish level, and then you have that previous high there. So that's update on wheat. We also threw out corn as a trade idea as well. At the time when I'm listing both, I was leaning a little towards more. Corn is more of a favorite, but both of those certainly worth taking, and you never know which one will outperform. Corn usually tends to run a little more when they run, but again, they're all both, they kind of tend to move together, and that was a little minor uptrend line. So that was the case for corn was made CC at long here at that 504 123 support right there, and or after that bullish falling wedge breakout. And so it had a nice lift, went up about 7% or so from down here. Had a little correction, and we're starting to move back up, and this was a resistance slash a target zone actually that was hit, and so the top of that zone is about 528 right there. So again, I think if corn can push through here, ZC corn futures pop that 528 level, it should be able to run up to this next target zone there, about 547.25 up to 544.130. Next target would be 558 right about there, and so forth and so on. So that's corn. And then soybeans, they also, again, another one of the grains. These three tend to move together. Let me just go to the corn daily chart here for the ETN. That's what it looks like. So there's the same thing. The case was made corn long at support right there with a stop somewhat below. Probably have nah, I don't like that downtrend line. Let's just leave it alone. But let me show you the daily chart here. The case was made here, really nice support. You can see it as well in the daily chart around 1917. So again, it's all about risk reward. These commodities had a big run, like I said, and nothing goes up forever. They've been consolidating, mostly sideways, so correcting mostly in time more so than price. with big support right there. So again, you can go long at 1917, and or we're not too far from it now, with a stop somewhat below. And if that gets broken, and if we get a deeper correction in the ag commodities, 1744 is next support. We got a big thin zone right here between 1917 and 1744. That's why you may want to consider, if it enters that thin zone, the fact that it's probably going to want to go down there to 1744. And if it does, we'll look at it as a buy there. And if it's a super strong bull here in the commodities, maybe the correction is over soon and we rally back up and make another run at those highs, roughly about 2270. So that would be a near-term swing target, and longer-term traders may want to hold out for a breakout. Or look to re-enter if we go down to 1744-ish, or call it 1750. And ZS soybeans still at that support right there. What is that? 1260, 209, give or take, right there. Case was made and could still be made to step in long there, back there. And what we had is a this is a bullish falling wedge pattern with a breakout back test, and we're starting to move up. Work to be done. I think if we can take out that previous reaction high, that should open the door to this first target up here at 1335, 167, that is. Unadjusted target, actual resistance level. If that's all you're shooting for, you'd probably want to put your sell limit order just slightly below that. Next stop should be 1382, 281, and then 1421, 512. Those are the numbers there. And ultimate final near-term target, if these trades get some traction, 1468.97. So we'll call that 1469 if you want, give or take, right there. And that's soybean futures. Of course, you can use an ETF or ETN for that one as well. That's SOYB. Case could be made to, if it continues a little lower here, pretty good support about 2150, or if it doesn't make it down, whether it does or doesn't make it down there, here's a nice downtrend line which we could pop. If we can pop that trend line, we might get a nice rally there going in soybean futures. And if all those make your head spin, it's too much for you, you're not a full-time trader, you just want to keep things simple, JJG is the ETN for you. That's the grain ETN, and it has all three: corn, soybeans, and wheat. And it also is at support. So simple stuff. No guarantees it'll play out, but I can guarantee you it's objective to go long and pull back to support when something's in a bull trend. If that level breaks, just like the others, there's another decent support level below. So I'd put it, 50-50 odds that we're going to break or not. And even a long-term trader could take a position here. That's not too far below. And you could allow for a stop a little bit below that. But if that breaks, big old thin zone all the way down here to 50-66. There's your thin zone right there on the volume of price histogram. So, and that's because we had a quick rip up followed by a period of consolidation, then a bullish breakout, and then a back test of that level several times. So that's it. You're up to date on the grains. Now we are going to look at the ag input stocks. I'm just starting out with this one to queue up my list here. I'm going to start out at the top of the list, which is, I believe, sorted by market cap. So these are your bigger companies. I'm going to rifle through these. Some I like better than others, and I'll be very clear on which ones I do and don't like, or how much I like them. NTR, meh. I don't know. We had a divergent high right here. This was a divergent high, negative divergence. The stock corrected, but it's been correcting mostly in time so far. See, sideways. It has support there at 57.56. So basically, if it can hold that level, and there's the 200-day moving averages come in, so you get another thrust down there. I could tell you this: I'd like that one better down there if the sector still looks okay. Again, a drop back down to about 57.56, give or take, would take it down to the 200-day moving averages and price support. You could go long there with a stop somewhat below. Or if you're bearish on these, short it and maybe we'll get a drop. But again, right now, it's kind of in between, kind of in no man's land. It could break out to new highs. That's the thing. You have resistance here about $65. You can see that was a previous multi-year high, another one there, and another one there, roughly. So that one could break out. If it does, it may come in and back test this trend line again, which it broke, but it's, again, been chopping through there. So I don't want to spend too much time on it. Again, not one of my favorites, but there it is. Those are your levels. CTVA, this one, the best I can draw. I'm not crazy about this trend line, especially the way it acted around it, but I do think it's valid. I'm going to move it just slightly. Yeah, it's a decent trend line, I have to say. You have that comes off the March 2020 lows, quite a few reactions, as well as some here. Broke down recently, and that comes on the heels of this divergent high. So here's the story of these. They're in bull trends, but they've been in correction mode, just like corn and everything else. That's why I kind of segued into this. It's obviously related. These are agricultural input stocks. They don't hold the actual commodities, but they benefit from a boom or a bull market in the commodities market. Um, and as I mentioned all these back then. I first came bullish on commodities themselves a couple of years ago, and more so recently on these ag input stocks back here. We had quite a few as breakouts. This one broke out there because what they were doing, they haven't yet reflected, at least at that point in time when I highlight them, back here, they hadn't yet reflected the rally in the commodities, and they sure played a nice game of catch up. But here we are. So bull market correction, we'll call it right now. Support at 40.77. And if that breaks, there's certainly some support levels in between there. But this was a big level back here. 31.95. We'll call it $32. It was resistance for quite a while. We broke out here. There was your breakout back test, and then that big run. So look, point is, if things get ugly and this one doesn't hold this support here, whether you want to short it, that would be a potential target, or you want to be patient, wait for it to drop back down there and go in long if and when the charts confirm at the time, of course. Right now, I should point out there is some positive divergence right here. We've made equal lows on that 40.77 level with the indicators making higher lows, so hence we could see a rally there. So again, I'm lukewarm bullish on this sector. Again, more stock specific to me than you have to treat each one on their own fundamentals. 29.85 is pretty good support on Mosaic. Again, these have been in a bull run, but they did, nothing goes up forever. They had a heck of a run. Mosaic from the lows back in March of 2020 ran about 490%. So that's a pretty nice gain, and what do you expect it to go 3,000%? This is Mosaic. So it had a correction, rightfully so. Kind of got a little hot, overbought divergences. Pretty impulsive drop after the breakdown, but it's been holding this support, and I don't know if you can see them here. These are here. I'll turn them up for you, and then you can. The 200-day simple and exponential moving averages, and I point those out. Some stocks those levels act as support or resistance better than others, and you can see when you're in a bull trend, their resistance from above. The stock checked both those moving averages there. Check, rejected both times. Finally had a breakout above the 200s back here. Successfully back tested the 200-day exponential moving average there. Successfully tested it there again. And so far it's holding right above those. So what you have is dual support, price support about 29.85 and the 200 days. So obviously if we smash down through all those levels which come in together, that would most likely set the stage for a deeper correction, but unless that happens, the primary trend right now is bullish. Intermediate term trend is undecisive, really. It's been consolidating sideways, but this is the primary trend. So we could get a resumption of the bull market. What would be a good sign of that would be a breakout above the previous highs there, about 37 or so. Okay, next up, I'll go to FMC. I don't have a strong opinion on this one. I'm not crazy about the chart, so let me just move on, not spending more time on that. CF Industries, same story. You can see similar patterns here. Bearish rising wedges within a bull trend, breakdowns, sell signals, divergent highs at the top to confirm the bearish nature of the wedge. DH right there. Correction. Maybe a little bit of divergence there at the low, but most importantly, it pulled back to that 44.21 level that was support back here. Big support, because when it broke, look, the bottom fell out of the stock. And then we regained it here, had a little false break, couldn't hold it, broke out again, held it, successfully back tested, and boom. So this is a story. Maybe the others that are currently back testing or not far off those supports are going to do the same thing. Since we hit that 44.21 support, it's been about a 19% rally, and it's headed up towards a run at those previous highs. ICL, there's a trend line to watch. I don't have a strong opinion on this one. It's in an uptrend. You can buy pullbacks to the trend line with a stop somewhat below, so that might be your MO on that one. SMG, Scott's Miracle Grow. There's some divergence forming right here, positive or bullish divergence, and there's a potential trend line to use as for a breakout, plus some pretty decent price resistance at 149.57 right there. It was resistance back here. We gapped above it. There's your breakout right there on that big gap up. Back tested successfully, back tested again, off to the races. But hit it here, fell down below it. Will this be another whipsaw? We had a little whipsaw there. We'll see. Either way, all I can tell you, if we break above it, you have dual resistance levels in which to trigger an objective long entry. And then this one, I could list targets. I'll do it if it breaks out. I just say let it run for the time being. Trail it, set your stops, keep them relatively tight if you break out, and let it run if the sector's moving. LWLG, I don't know if this is in the right one. Yeah, it says agriculture inputs. I have no idea. Light wave logic, I don't know what they do. Maybe UV lights, I just don't know. But I can tell you, I should have added it before. There's a little trend line there to watch. Not one of my favorites. If it makes any marginal new high soon, meaning just above this previous high, you're going to have negative divergence there. Pretty big divergence, and it's already had a heck of a run. UAN threatening to break out to multi-year highs. Right there, you have multiple highs. Stock's been checked there several times. Could break out. You're going to have divergence, but that doesn't always stop stocks in a bull market. It did here. You had a divergent high, but guess what happened? The stock corrected, but again, it's been correcting in time, going sideways mostly instead of price. Those are the two ways a stock can correct. And in a bull, strong bull trend, every now and then you're going to get ahead of yourself. You're going to get divergences, overbought conditions, and strong stocks will correct in time more so than in price. BIOX, I don't know. You can see the lines. I don't have much of an opinion on that one. AVD, this one looks ready to pop. It's fallen down here. AVD is, what's the name of that one? American Vanguard Corp. You have a nice downtrend line right there. You have a level here at about 1542 I've had on this chart for quite a while. So if we can pop that, I believe these are the same levels I've had on this chart for a while. We'll just use them again. 1617 first target, 1809 second target right there. So there's your positive divergence as well to confirm. If it goes a little lower, there's also support down here about $14. But again, be on the lookout for potential breakout soon, and that would trigger an objective long entry. IPI, Intrepid Potash, same story. Had a good run, put in a divergent high, negative divergence, and it's been correcting mostly sideways. And if these stocks can move up, a lot of them break out of those previous highs, it's going to be bullish and probably lead to the next leg up. Otherwise, if the market takes it on the chin, or this sector, and that's one thing I like about this sector, it kind of marches to its own drum beat. It doesn't have to, it doesn't always do what the stock market does. And next, again, I'll get to the cannabis stocks, and they completely march to their own drum beat. So this is a long-term trend line that might come in as well. So if you break that 2730, you might want to look to go long here, 2087, and a back test of the trend line. But you could also go long right here above 2730 and swing it up, for a run back to these recent highs and possibly a breakout above. That is IPI. MBII, this little sucker can run when it wants to run, low price stock. What I like about low price stocks, well, first of all, they're high risk. I need to throw that out there. If you don't know what you're doing, stay away from penny stocks. But what you'll notice, a lot of these low price stocks like this, when they break the $1 level, $1 is right here, they risk being delisted. So the company will do whatever they can to get that stock price back above. And when it happens, it's usually bullish. So you can see that brief dip down below there. Put in a divergent low. This one's been highlighted on this site so many times as a trade idea. And we must have, I'd probably say, at least several, if not a half dozen, triple digit gainers on this stock, because it really runs when it wants to run. Triple digit meaning 100% or more. Off this divergent low back there, which I can't recall, but it was probably pointed out at the time, that stock ran 372%. There was another breakout right here of a little nice wedge pattern, and there was also a back test of this trend line, so that was also a bullish breakout right there. That From that point, the stock ran about 160%. I believe it was highlighted back there on that breakout. Now, we don't have any screaming setup here, but we do have some support. See this line right here at about 85 cents? The stock's come down to that level before. It had a brief dip below here. And remember, this also, by the way, guys, was COVID right here. So everything kind of overshot. And it recovered, which is the important thing. Then it had that big run. So I'm calling this, so far, a successful test of the 85-cent level. And I'm calling this an objective long entry. I'm calling this a very speculative stock, very aggressive. Don't put too much money into this thing, but it doesn't take much. If it goes from 94 and it can recover that $1 level, let me just give you a target right here, 135. Let's keep things very simple. I'll color it red so I remember to come back and revisit that. So there it is, and could certainly do more, and you just use your stops in line with whatever your price target is. Use an attractive risk-reward ratio, 3 to 1 or better, and let it run, or pass if it's not your cup of tea. CGA, China green, there's another one. This one I definitely recall mentioning back here on the downtrend line breakout, and we had big resistance at 309. So that was the last, and final objective long entry right here when we broke the 309 level. And from there, the stock hit my max target and slightly overshot it for about a 480% gain. So where we're at now, again, when it got there, when it hit my final target, we had a brief overshoot. We put in negative divergence at the high, and it corrected, and as it should. This is a volatile stock, so the correction was good for a drop of about 56%. So if you book profits at the max target, you sidestep to giving back half your entire value in that stock by sidestepping that 50% drop. And where we're at now is it's tagging these 200-day. I don't know if you can see them here. I turned the levels back down. Right here in red is the 200-day exponential moving average, and we had a perfect test there. Once we took the 200s out here, the 200-day simple is just below. So there's your 200 days. We back tested, and we're back testing right now. They're pinching together. The 200-day simple and exponential moving averages both come in right there. So you can buy this stock right now, right off the 200s. For what could be the next leg up, and you can put a stop somewhat below, maybe on a closing or a 2-day closing basis. Again, this thing can really, if it breaks support, it can really go. So you want to kind of be a little more active on this one, is what I'd like to say. Watching it intraday if you can afford to do so. If you're not in front of your computer and you have to set a hard stop, then give it a little bit of room. But these guys are whippy, so what happens is, they can break it intraday, hit your stop, and then go back up only to close the day back above the 200. So just keep that in mind. That's CGA. RKDA next. This little sucker can run too. We've had many double or triple digit gains on this one, trades, including most of these big rips in recent years like that one. This one right now, okay, what I would point out is here's some long-term support. Right about here, we had a major reaction low in 2019 right there. It did break this 238 support. That was better support. We have more reactions on there. So I have to say this on face value is bearish. The fact it broke that, tried to regain it, rejected. However, we're not far off that long term or that previous reaction low. It'd be a speculative and aggressive trade. Take a shot, keep stops relatively tight. What I mean by that, it's a $2 stock. If you run a 5% or 3% stop loss on this stock, you're going to most likely get stopped out. So you got to give it a little room. The upside potential, should it recover, regain, that's what I'm looking at. And you can also hold off and see if it can regain 240 on a solid, especially on a closing basis. See, here's an example where it popped it really good, but that was intraday. That's a candlestick shadow right there up top. aka wick, when it comes above the body. That means it popped it intraday only to close back down right around on that level. I want to make it a little more accurate. Let's call it right now, to be safe, 245. So there's your magic number. A pop, solid pop, special daily close above 245 should put this guy back in the game. That would mean that this was a bear trap, aka false breakdown, if that can happen. And we could probably run on up here, at least to this reaction high. Let me give you a first target, minimum target, about 310. Okay, and then sometimes you get in this guy and you just let it run, just trail your stops up as it goes, and it tends to have these big, strong moves. And again, you can look at, in many cases, triple-digit gains on it. Y10, YTEN, Yield 10 Biosciences. This one was also mentioned back here. There's a lot of lines. This chart's busy. Let's just zoom in. Forget about then. Right now, this is the line I'm looking at. There's your downtrend line. There's your divergence line, aka positive divergence, at least there on the PPO, oversold on the RSI, plus support right here. It's not super well defined. I'm going to call it more of a support zone. Let me box that in for you. I'll give you a colored box. So here's sort of a support zone right there. It runs down to about 557, and the stock. So the story on this one is one of two ways. You can buy it right now. You're buying a stock at support, and if it can hold that support, ideally above 557, again, stop somewhat below there, or you can wait to see it break above this level, $7. I like going in here, and then you can always add to it. If it breaks $7, these are old levels. I was targeting before, 842, and that would still be your next target after $7. So first target would be 7. We're at 595. If we hit 7, you're talking about an almost 20% run. If we hit the next target, 842, you're talking about a 40% run. And yeah, we'll just leave that old 1090 target still there. And that's a line I had all the way back here. I created that line back in June 2nd, 2020, and still a level there. So those are your potential targets for YTEN. SVFD, I have zero opinion on that. Doesn't have enough trading history. Seed, here's another one, looks good. Support right here, roughly 777. This, like many of these ag input, they're whippy, they're prone to whipsaws. There was a false breakdown, we recovered it, and from that point, the longs that got stopped out or the shorts that got sucked in, within 3-4 days that stock ran up 100%. So they got wrecked if you shorted that. So you got to be careful with these, and that's why you can allow for a little bit of those whipsaw moves down through there. But I can tell you there's a lot of reactions on that level, including a nice clean one right here recently. We're kind of flirting on it now. So the story of this is same thing. You can buy here, make a case to go long at support. Yeah, my views on the stock market. That's probably not going to help these, even though some of these don't always trade with the indexes. Again, my job is to throw out trade ideas. Your job is to decide which ones to take, if any. But these are some of the better looking longs that I see right now. And again, it's all about risk reward. So if it drops this far, you're not going to ride it down to 487. You're going to get stopped out probably below those recent lows right there. If it goes up, we'll just use the same targets I've been targeting on this one for years now. 1084, or I'm sorry, 1081. We'll call that 1080, 1439, and we'll see. I'll follow up on these if this sector starts to get going and get some traction. And that's about it. That's the sector itself. IX 1010 is a symbol on TC 2000. All right. Let me wrap it up here, and I will do a follow-up video on the cannabis stocks today for you. This has been Randy Finney with Right Side of the Chart. Have a great day.